Welcome to your daily stock market summary from MarketSnap. What a Monday, folks. We have a massive market-moving event to kick off the week. The US and Iran have agreed to a preliminary peace deal, and the markets are absolutely loving it. This is a risk-on day of epic proportions, so let's break down exactly what happened and what it means for your long-term portfolio. Let's start with the headline numbers. The Dow Jones Industrial Average hit a fresh all-time high, closing up nearly a full percent. The S&P 500 surged 1.65% to close at 7,554, but the real star of the show was the tech-heavy Nasdaq, which absolutely ripped higher by over 3%. The VIX, the market's fear gauge, tumbled more than 8% to just over 16, signaling a massive wave of relief sweeping through Wall Street. The catalyst is a preliminary U.S.-Iran agreement to reopen the Strait of Hormuz. This is a huge deal. Oil prices have plunged to their lowest levels since early March, with Brent crude falling below $83 a barrel. This removes a massive war premium from energy prices, which is a direct shot in the arm for consumer spending and a huge relief for inflation. The market is pricing this in as a clear win for the economy. The winners today are a direct reflection of lower oil prices. Look at the large-cap gainers. It's a tech and consumer paradise. Micron Technology surged over 10%, and Marvell Technology jumped over 10% as well. Western Digital absolutely exploded, up over 16%. But the real story is in the consumer names. Royal Caribbean Cruises and DoorDash both rallied hard. Lower fuel costs and more money in consumers' pockets are a powerful combination. On the flip side, the losers board is dominated by energy. It's a bloodbath for oil stocks. ExxonMobil fell 4%, and Petrobras dropped over 5%. This is a classic sector rotation. Money is flowing out of energy and into the sectors that benefit from lower input costs. For a long-term investor, this is a great reminder to check your sector exposure. Are you overweight energy? This might be a moment to rebalance. Among the mega-cap market movers, the action was all in tech. NVIDIA, the most active stock by volume, was up over 3.5%. AMD flirted with a $900 billion valuation, surging nearly 7%. Meta Platforms jumped 5% after launching new AI features on Facebook. Even Palantir and Robinhood saw significant gains, up over 5%. The AI trade is back in full force, supercharged by this geopolitical tailwind. But it's not all smooth sailing. While stocks are cheering, the bond market is showing a bit of skepticism. Treasury yields are sliding, which suggests the bond market isn't fully convinced this deal will stick or that it will immediately solve all inflation problems. We also saw a weak Empire Manufacturing Index, which missed expectations by a mile. This is a reminder that the economic data is still mixed and the higher-for-longer rate environment is still a reality. Speaking of rates, this is a huge week for the Fed. Kevin Warsh will chair his first rate-setting committee meeting. The market is not expecting a rate cut, but all eyes will be on his press conference on Wednesday. His communication style is a big unknown, and the market is bracing for potential volatility. This is a pivotal moment for monetary policy. On the earnings front, we have a few notable reports this week. Oracle reported earnings after the close today, and we'll be watching that. We also have reports from Adobe and RH later in the week. Keep an eye on these names, as they can give us a read on enterprise spending and consumer health. You can find exclusive earnings transcript summaries on MarketSnap. Looking at the weekly performance, the rotation is clear. Consumer defensive and cyclical stocks are leading. Chipotle, United Airlines, and Dollar General are all up over 10% in the last week. This is the lower oil, higher spending trade in action. On the other side, last week's losers were a who's who of high-flying tech. Supermicro was down over 32% for the week, and Oracle, Autodesk, and Cloudflare all took a hit. This shows that even within the tech sector, there is significant divergence and rotation happening. Sector-wise, the best performers over the last week are consumer defensive and consumer cyclical, both up over 3%. This confirms the narrative that the market is betting on a stronger consumer. The worst performer is technology, down over 4% for the week. This is a bit of a head-scratcher given today's rally, but it highlights the volatility we've seen recently. A couple of other big headlines to note. Fox is buying Roku for $22 billion, a massive bet on the connected TV space. Also, Salesforce is buying an AI firm called Fin for $3.6 billion. And of course, the SpaceX IPO from last Friday is still making waves, with the stock surging another 15% today. The market is digesting a lot of big corporate moves. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. It was a historic day driven by a geopolitical shift. But remember, for the long-term investor, days like this are noise. Stay focused on your strategy, keep an eye on the Fed this week, and we'll see you tomorrow for another breakdown. Don't forget to check out our exclusive SWOT analyses on MarketSnap to help you make smarter decisions.